So subject to the permission of your current mortgage lender, you are allowed to have a second mortgage secured on your home. So these are popularly known as secured loans, but to give them their official title, these are second charge mortgages. So the reasons why you might take out a second charge loan. Well, often customers approach their existing lender if they want to borrow some more money, for example, for some debt consolidation or for some home improvements, but they may be declined for that further advance. But that's not necessarily the end of the road just because your lender has said no. If it's a small amount of money, you'd probably look at unsecured lending really anyway. But if it's a larger amount, maybe £25,000 or above, then a further advance or a second charge might be a more appropriate option for you. Other reasons that you might do a second charge. It could be that your credit profile has changed in between you taking out your original mortgage and coming to apply for this extra money. So if you've got a mortgage with one of the high street lenders, and then unfortunately maybe you lost your job or you're off work and you end up with a default or a county court judgment on your credit profile, that might be one of the reasons that you've been declined. But it would seem a shame then to move your entire mortgage into a specialist lender and be faced with a much higher rate of interest for the sake of borrowing an extra few £1,000s. And this is one of the reasons that second charges come into their own, because you're able then to retain the really attractive rate that you've got with the high street lender and just borrow this extra money on this, what will tend to be a higher rate. And that is another thing about secured loans. The fees and the interest rates tend to be much higher than a normal first charge mortgage. And the reason for that is pretty simple. It's all about the risk of repossession. So if you fall into arrears and sadly the property ended up being repossessed, then your first charge lender would have first call on that property once it's sold to get their money back. Only when that is done can the second charge lender come along and try and reclaim their money from the proceeds of the sale. So it's higher riskier lending for the second charge provider on that basis. So therefore, their business models, in order for them to kind of make profit, which is what it's all about for lenders at the end of the day, that means that the fees will tend to be much higher to set up a second charge mortgage, and also the interest rates on offer tend to be much higher as well. And those are the things that you'll have to take into account and take advice in terms of what options are open to you if you end up in this situation. Another reason now and again that a second charge can be more appropriate is that if you're locked into a heavy early repayment charge on your current mortgage, well, again, you can avoid having to pay that by remortgaging, leaving that mortgage in place and taking out a second mortgage with the different provider. Thanks for watching the video. We do rely on user-generated content, so please subscribe if you found the information useful, and send me a question in the comments below or drop me an email and I'll do my best to answer it.